Hi, I'm Joe Camberato, entrepreneur, CEO, and founder of National Business Capital. I actually wrote this whole article here on this landing page, and I wanted to put together this quick and simple video for you to just talk about business loan interest rates. What's amazing to me and why I'm making this video and why I put together this article is because there's not a lot of information out there about business loan interest rates. What's even more challenging today is there's a lot of different options out there. When you Google business loans, a million different things come up, and there's a lot of different places that you can go, which actually make it more confusing and frustrating. And most of those places, when you look online or sometimes even when you call them, don't share what the actual rate is, and they just want to take your information. So I'm going to give you that information. I'm going to be really transparent, and it's exactly why I created National Business Capital. So if you don't know, National Business Capital is a marketplace where business owners can apply. We have over 75 lenders on our marketplace, and we can match you to the right one or two or three different lenders, bring back multiple options, so you know what and understand what your options are, but also that you can get the best rate that's out there. Me and my team have been doing this for a long time, again since '07, and since '07 we've helped secure over $2 billion in funding and have completed over 27,000 transactions. And that number continues to grow every single day, which is amazing. All right, so I'm gonna break it down quick and simple for you. I'm gonna move fast because I respect your time. And just understand, if you have any further questions, if I wasn't clear on something, you can always reach out and simply speak with my team. They're very knowledgeable. We spend a lot of time on training. And because of how many applications we process every single month, thousands of applications, we do hundreds of fundings every single month. We know in real time what the rates are because they're changing basically daily, and lenders are adjusting those rates pretty much every single day. So if you have any questions, want to know what the rates are today, just reach out to my team and we're happy to give you that information. And a lot of customers are getting ready to, take on funding for the business or do a project or ready to make another investment in their business and just want to get some information. So you can use us as a resource. We're happy to give you that information, even if you're not ready to move forward today. So what's important to understand is there's really two places today that you can get a business loan from. One is from a bank, a traditional bank, and the other is from a non-bank lender. But what's really important to understand is there's many different factors that go into presenting an interest rate to you. Banks and non-bank lenders will look at a number of different things to evaluate the risk of lending to you and your business. And then based on how they feel that risk is, they'll make up an interest rate. So an interest rate right now won't be the same for one business owner to another. So that's really, really important to understand. So I'm going to give you a range of where the interest rates are, and I'm also going to explain a few things that are really important to understand. So let's talk business loan interest rates from banks. Typically, if you're going to get a business loan from a bank, is usually going to be your lowest cost of capital. Not always, but usually. Typically, the way most banks will work is you'll get approved for prime rate plus an interest rate. So right now, as I make this video, prime rate is at 7.5%. It's on the higher end, it's gone up. So in an example where if you got prime rate plus 2%, that would put your effective interest rate at 9.5%. Sometimes when you're working with the bank, you can lock that interest rate in, and you always want to ask that question. But in a market right now, you actually might want to consider taking a variable rate and hedge that the rates are probably going to come down in the future, so you don't lock in at this high interest rate. It's something that you really should consider. So what's also important to understand when working with banks, banks are going to look at collateral, and there's a number of different collaterals. The main type of collateral is real estate, B2B quality receivables, inventory, and then also high value equipment, machinery, trucks, construction equipment, manufacturing equipment, things like that are considered collateral. So banks are going to look for collateral. They're going to look at your receivables. If your receivables are not B2B, they really can't use those receivables as collaterals. So if you're selling direct to consumer, that collateral doesn't work, or inventory and equipment. So when working with a bank, they're going to look at collateral. They're also going to look at your financial statements. They're going to look at your most recent year's tax returns. And they're going to want to see that you're profitable and, more importantly, can afford the debt that you're taking out. So when working with a bank, they're going to focus on your business credit, they're going to look at your profitability, and they're going to look at what type of collateral coverage you have. Now, if you don't have collateral coverage, they may consider doing something if you're very, very profitable and have excellent credit, but still they're going to cap out at most likely $100,000 to $250,000 to maybe $500,000. Once you really exceed there without collateral coverage, receivables, equipment, real estate, it's very hard for a bank to go beyond that amount of about $150,000 to $250,000, and $500,000 being really at the top end. And in today's market, it's going to be really hard to get that $500,000 mark without collateral coverage. So you have to understand, when working with the bank, rates will usually be the cheapest, but getting approved will be the hardest. So now, outside of a bank, we move to non-bank lenders. Now, these lenders, non-bank lenders, can be referred to fintech lenders, alternative lenders. They're really all within the same. It basically means they're not a bank, they don't do checkings and savings, but because of that, they're just lenders. They lend their own money, and they don't have the same regulations of banks and same strict rules. So they will look at all different types of situations. So non-bank lenders will look at a number of different things. All lenders, for the most part, are going to look at your personal credit. They may or may not look at your financials. They will definitely look at your cash flow and want to understand it. The difference with a non-bank lender is they're willing to take on more risk. They're not focused on collateral coverage. They move a lot faster. They make it a lot easier. And because of that, and in return for that, their rates will typically be higher. Now, with most non-bank lenders, you'll look at interest rates around 10, 12, 15, 18%. And in higher risk situations, the rates actually might even be higher. When you're going to work with a non-bank lender and anytime you're going to pay a higher interest rate, your opportunity needs to make sense. And you need to be putting higher interest rate type of money towards growth opportunities in your business. Now, I wouldn't get so caught up in the interest rate. It is important to know what the rates are. But in a market like today, where the rates are higher and we're in a tightening market because there's so much talks about recession and different things, you really have to look at what your opportunity is, and if capital and access to capital, getting money into your business, is restricting you from growth or taking advantage of opportunities, I really recommend putting some pen to paper and looking at, hey, if I did borrow money at 12%, and I was able to go do this in my business, what type of return will you get? So you really need to understand your ROI. If you've got a really great opportunity, whether you get 8% from a bank or 12% from a non-bank lender, usually your opportunity will still be profitable and make sense if whatever it is that you're doing makes sense and it's going to bring a real return into your business. So don't get caught up in that interest rate, get caught up in that opportunity, do the math. And a lot of times when we go through these exercises with business owners, we actually find by business owners actually doing nothing, it will cost them more. And what I mean by that is, if you've got a great opportunity in your business that will bring you a great return, even though you might have to pay a little bit more, the key is getting access to capital. And if you were to actually do nothing by losing out on that opportunity, you'd lose making a lot of money in your business. So if you put together your opportunity and say, hey, I have to pay 12%, but I've got the ability to make 40%, well, do that math, and it obviously is going to work out in your favor. So remember, interest rates are changing constantly. So whenever you watch this video, the rates could be lower or they could be higher. What's really important is that you reach out to my team, go over your opportunity, and we can help explain to you exactly what options are available, what the interest rates are. Does a bank or a non-bank lender make sense? And there's also other options outside of business loans that may actually make sense for your business. And when you're buying equipment and different things, there's different products that could be tied to that piece of equipment that can actually bring that rate down. So it's really important to work with someone like National Business Capital that has access to all the different lending products that are out there, can explain to you what your options are. Because sometimes you may think that you need a business loan, but there may be another product that you don't even know about that's available to you to get you your best cost of capital, or can make much more sense for your opportunity. All right, I hope you found this video helpful. Again, if you have any further questions, please make sure that you reach out to my team, and I wish you nothing but success in your business. Keep growing.